Have you ever wondered why some investors stay calm during financial storms, while others panic and lose everything? Here's the surprising truth. It isn't superior intelligence or luck that separates them. It's mindset, and specifically a Stoic mindset. Because when you master your emotions, you master your investments. And today, I'm going to show you exactly how Stoicism gives you a proven path to build wealth calmly and consistently. But before we dive in, let me ask you this. What if your biggest threat in investing isn't the market itself, but your own reactions to it? Stay with me, because the answer to that question could completely change how you think about money forever. I'm Saul, and I want to take you on a journey into the ancient world of Stoicism, not as dusty philosophy, but as a practical guide to wealth building in modern times. And to make it crystal clear, I'll share real examples of how Stoic principles have influenced not just emperors and philosophers, but also the most successful investors of today. Let's start with the first Stoic principle that directly applies to investing. Control the controllables. Marcus Aurelius once wrote that freedom comes from focusing only on what is within your control and letting go of everything else. Now think about the stock market. You can't control economic downturns, interest rates, or breaking news, headlines, but you can control your decisions, how much you save, what you invest in, and how you react when volatility strikes. Here's a fascinating example. In 2008, when markets were collapsing and panic spread across the globe, Warren Buffett remained calm. He wasn't trying to predict the next twist in the economy. Instead, he focused entirely on his principles. Buy businesses you understand, stick to fundamentals, and avoid panic selling. That's Stoicism in practice, patience and discipline in the face of chaos. But here's the twist. Even though this principle sounds simple, very few people actually follow it. Why? Because emotions sabotage them. Fear makes them sell too early. Greed pushes them to chase hot stocks. And this is exactly why Stoicism is so powerful for investing. It teaches you to separate impulse from action. Which brings me to the second Stoic investment lesson. Cultivate patience as an active strategy. Seneca wrote that true wealth is not about speed, but persistence. In today's language, that means compounding. A small, consistent action repeated over time creates exponential results. Let me ask you, have you ever looked back and thought, if only I had invested 5 years ago, I'd be in such a better place today? That's the cost of impatience. Modern research proves that the average investor dramatically underperforms the market, not because they pick the wrong assets, but because they lack the Stoic patience to stay the course. And here's a story that illustrates this perfectly. A study of fidelity investors revealed that the best performing accounts weren't those of the savviest traders. They were the accounts of people who forgot they even had investments. Think about that. Their very inaction, their calm detachment, outperformed the frantic energy of others. That's patience rewarded. But you might be thinking, how do you actually develop patience when the world is constantly screaming at you to act? The answer is hidden in another Stoic practice, negative visualization. Imagine this. You invest a portion of your wealth in a stock, and it drops 20%. Most people panic. But the Stoics would prepare for this scenario in advance, rehearsing the possibility of loss so that when it comes, it doesn't shock them. Instead, they respond strategically. Now here's the important part. This practice doesn't make you pessimistic. It makes you resilient. By expecting volatility, you stop fearing it. And once you stop fearing it, you can calmly identify opportunities others miss. Because remember, when everyone else panics and sells, prices drop. And that's where long-term wealth is built. But let's not stop there, because there's an even deeper question most people avoid. How do you know when to act and when to stay still? That's where another Stoic insight comes in, one that has guided philosophers and modern billionaires alike. And I'll share it with you in just a moment, because once you grasp it, you'll see why consistent wealth building isn't about timing the market. It's about mastering yourself. The Stoic insight I hinted at is the art of deliberate action. Epictetus taught that freedom comes not from endless motion, but from intentional choices aligned with reason. In investing, this means resisting the constant urge to tinker with your portfolio and instead making carefully chosen moves that serve your long-term plan. Think about it this way. Many investors act like gamblers, making trades out of excitement or fear. But a Stoic investor acts like an architect, designing with purpose, building brick by brick, and refusing to let impulses destroy the structure. It's not about doing more, it's about doing what matters. Here's a practical example. A friend of mine once told me he spent years jumping between different hot investments, from penny stocks to cryptocurrencies, chasing quick returns. The result? He lost more than he made, and the stress drained him. When he finally slowed down, studied index funds, and committed to a consistent strategy, everything changed. Within 3 years, his financial situation stabilized and grew steadily. What shifted? He began acting like a Stoic, measured, calm, and deliberate. But here's the twist. Deliberate action doesn't mean never taking risks. Stoicism doesn't ask you to avoid risk. It asks you to face it rationally. That's why reframing risk is the third critical Stoic investment lesson. Most people see risk as danger. Stoics see it as opportunity wrapped in uncertainty. John D. Rockefeller, one of the wealthiest men in history, embodied this principle. When markets panicked, he didn't run. He looked for discounted assets and calmly bought them. He famously said he tried to turn every disaster into an opportunity. That's Stoic reframing in its purest form. And here's a question for you. How would your financial future look if, instead of panicking during downturns, you calmly prepared to benefit from them? This is where the Stoic practice of premeditatio malorum, premeditating adversity, becomes life-changing. By imagining worst-case scenarios in advance, you not only reduce fear, you position yourself to act decisively when others freeze. But what about the noise? The endless headlines, the predictions, the so-called experts telling you what's coming next. This is where the dichotomy of control becomes your shield. You can't control the market. You can't control inflation, politics, or global events. What you can control is your research, your savings rate, your patience, and your discipline. Warren Buffett once said the stock market is designed to transfer money from the impatient to the patient. That's a Stoic truth disguised as financial advice. If you focus on what's in your circle of control, you build wealth calmly, no matter the storms outside. Now you might be wondering, does this really work for ordinary people or just billionaires? Let me share a surprising example. Fidelity once studied which investor accounts perform best. Do you know the answer? It wasn't the professionals. It wasn't even the most active traders. The top performers were accounts that had been forgotten. In other words, people who did nothing outperformed those who constantly reacted. That's Stoicism at work, calm consistency beating frantic motion. So let's bring this together. Stoic investing rests on 4 timeless pillars. Control what you can, cultivate patience, reframe risk, and act deliberately. When you practice it, you transform from a reactive speculator into a resilient wealth builder. And here's where I want to challenge you. Ask yourself right now, what part of your investing is driven by emotion, and what part is driven by principle? If you're honest, you'll see opportunities to shift toward a Stoic approach immediately. Because ultimately, Stoic investing isn't about beating the market every year. It's about beating your own impulses every day. And once you do that, wealth becomes not a gamble, but a calm and consistent outcome. So the choice is yours. You can keep chasing trends, living on the edge of anxiety, or you can adopt the Stoic path, calm, deliberate, disciplined, and steadily build the kind of wealth that endures.